Good morning, good afternoon, good evening, one and all. Welcome to another exciting edition of the Smoking Barrel. I'm Rustin Edwards in dusty, hot, humid Geneva with my illustrious co-host, Mr. Matt Stanley in Dubai. Top of the
Hello,
morning.
greetings. It's yeah, same here, Dusty. I think it was raining a bit here this morning, which is odd. It does rain here in the summer sometimes, but it quickly goes. But yeah, I wonder how many people are out there because I think a lot of people are on their summer holiday making sandcastles.
Well, that could be, but if you're making sandcastles, you got to be keeping an eye on the sand and on the surf, as well as an eye on oil markets, because they seem to be trending to the upside across the board.
Yeah, 89.43 we are for front month Brent. That's up a buck 70. This is where we did record last week. So where were we this time last week? 11th, so the 4th, 79.36. We're up 10 bucks in a week.
Yep.
And nothing has actually happened. And that's the story, is that
Well,
all has happened.
there's been a lot of posturing that's happened, a lot of statements that are being made, which I think is pointing to will the Straits ever return to what it was pre-conflict in the Middle East? The answer to that question is most likely no. And so you basically have the Iranians and the United States firming up their positions, leaving the rest of the world holding a bag that is getting less and less full every day for petroleum.
Yeah. Yeah, a bag of something they're all holding. What did Jeremy Irons call it in Margin Call the film? A bag of odious excrements that he's holding. No one else in the world wants. But the opposite of that, I suppose. This is how much gas oil is up in a week, though, per barrel, 28.32. So the
Yep.
crack is up 18 bucks. I mean, I know it's the futures, not the swap, blah, blah, blah. Leave me alone. But it is a gas oil story. So let's talk about where gas oil is trading now. Gas oil is up 41 bucks a ton. Now,
Well,
August expires on,
tomorrow.
is it tomorrow?
It's tomorrow.
1345. It's still trading small, 100 bucks it's front spread, 100 bucks backward. From gas oil is trading $180.54 a barrel.
Well, that tells you how much the market is missing that gas oil molecule because distillate is going to be the big story as we're coming out of the summer, heading into Q4, which is typically the distillate fill period going into the winter.
I
And
mean,
right
look,
now, if you look,
heating oil's 178
yep. But
in
if
US.
but if you look at stocks, I mean, Europe's going to have a big problem, I think, coming into Q4 and into Q1 of next year. And the fact that without the extra distillate being imported in from Asia or from the Middle East, there's a gaping hole.
There is, and let me show you that because we haven't spoken about flows of gas. Middle distillates, it's funny, isn't it? Because when when said stuff hit the fan, everyone was going, "Oh my God, jet fuel!" And now everyone's on holiday, everyone's going, "Oh my God, diesel!" So we've moved on from I can't afford my well, can I afford my holiday in the south of France or wherever you may be, to now, am I going to be able to afford the world's biggest used industrial fuel coming into winter? So
Well,
if
I
we
mean,
look at
the one piece about the jet fuel that never materialized was the fact that jet airline travel prices, as far as I've seen, have not really gone up to reflect a increasing jet fuel price. So demand has not really been impacted, although airlines did cut their forward schedules a bit to accommodate for potential lack of supply. But nevertheless, I've yet to see any story of any airport running out of jet fuel.
no, I agree, and I think we're talk. I want to talk about jet fuel with you in a minute because I think that's the demand destruction story because the Middle East is still massively curtailed in terms of number of flights. Talk about that in a minute. Let's talk about European monthly imports of gas oil and diesel. So where are we? All let's go July because we've got that 6.4 million tons. Do you want it in tons or 1,000 barrels a day?
Feel
Don't
the
care.
choice on that one.
Let's go to July last year. July last year, 9 million tons, 8.9, give or take. In July, 6.5 million tons. Now, here's the thing. This is the total, largely irrelevant because it is up and down. We're not that low, that low compared to previous years. But when we split that by where that oil has come from, origin countries. So let's go to Kuwait. Obviously, Kuwait, there's hardly been anything that's come in into Europe. Nothing in May, you can see that here, and maybe one cargo in July. We see there's a couple of stuff has been moving, stuff has been getting through. There's when it crossed the Strait of Hormuz. This is the last one. How much have we got in August? None. Now, you can see the trickle. June, there was one cargo that came in, oh, a couple of cargoes. Sorry, I'm trying to get Kuwait here. There. Let's quickly go on. One cargo that went into via Bab el Mandeb, went into Romania. And then August, we've got nothing because things all kicked off again, didn't they? And this is where we are. And, okay, where has been the sort of the winners? Nothing out of India into Europe. You can see April, May, and June there on the right-hand side. What about the US though? Let's see what
But
happens.
but if you think about the Indian supply has been curtailed mainly due to EU sanctions on Russian origin production. So
Right.
India has been taking a lot of Russian crude, making gas oil, and that gas oil cannot come to Europe because of that curtailment due to the sanctions program.
Look at US. So in August, the US were by far and away the biggest. Look at that. Of 5.7 million tons into Europe, 2.4 million tons of gas oil and diesel came from the US. If we go back to a year before, what was it? Still high, 1 million tons, but you're over double how much came out, how much are coming from the US. Granted, numbers were higher, but we're obviously seeing less Russian. I'd imagine that's a lot of that's going into Turkey. Let's have a look. Yeah, Batumi, Georgia, something to you can see. Yeah, Mersin, etc. But yeah, look, this is the issue, isn't it? I mean, where does this chart go? If it continues to do this, the rally in gas oil is justified.
Well, I would say I would change your from Europe, change it to Netherlands.
Okay,
And the reason why I say change to the Netherlands, because that's the big import hub for Northwest Europe, your ARA terminal.
okay.
And that's where the ICE gas oil futures trade. That's also where you distribute break bulk to go downriver to the German heartland and to Switzerland.
So there's basically three cargoes, not three cargoes, but three suppliers. So in August, we're looking at 550,000 tons, three quarters of which is from the States, one cargo from Oman, probably loaded out of Duqm, I'd imagine. So I lied. And then we've got one cargo somewhere else that's loaded out of Portugal. There's one from Dos Bocas from Mexico. That's interesting.
Well, Dos Bocas has done a lot of upgrading, so they're actually exporting now more product than fuel oil
Okay.
with their coker.
Okay, and we've got a small little cargo here that's loaded out of a local terminal. That Mexico one's interesting. Mexico to Netherlands. Okay, it's always been there. Why have you got US in here, Stan? Mexico. Imports from to Netherlands. To Netherlands from there you go. Not much. The first cargo that looks like. So people are getting more and more. I mean,
Well, as markets always do, markets always get more creative on how they can meet their supply needs by trying to find other products. And with the current um, um, disruptions in the Middle East supply chain, and then you throw on top of that the issues in the Red Sea with the Houthis attacking Saudi refineries and terminals, you end up with people looking at alternative supply points that can meet the needs of the country. And so who benefits the most? Yeah, the Gulf Coast refining system benefits the most of all
by
this.
far, by far and away, the biggest. Sorry, and I'm going fast over here. Spain, pretty steady. Finland, obviously, that's geographically is not far. France, always a nominal supplier. UK, would that probably be Valero, I'd imagine.
Well, that's your Valero, most likely also your Irving refinery up in Whitegate, as well as P66.
Yeah, let me pull up. UK. There. Origin. Let's do origin ports. Sorry, I know that we're geeking out here in terms of data, but we're in the UK, Immingham, Ellesmere. It's a fair split, but I mean, it's already covered the top 10 really. But yeah, the rally. I don't think anyone in this market, though, if you're trading crude or gasoline or whatever it may be, nobody can argue that this rally is nothing but justified.
Oh, well, I mean, we've discussed about this all along that, the market, it seems to be underpricing the geopolitical risk and the actual supply issues. And I think as we are now getting into, as we said earlier, the winter fill, and the need of markets to establish supply points for, Q4, Q1, and the supply is not being routed just yet. So we are seeing that spike in the gas oil crack, which is getting the economic signal to produce as much distillate as you can to every refinery in the world. And the same thing with gasoline cracks, although not to the extent, but still to the point that make as much gasoline. And then even if you look at the fuel oil market, the VLSFO market in general, that is showing make more VLSFO because we don't have enough. The only market that really is sitting on a negative crack is your high sulfur fuel and your naphtha at the moment. And even naphtha
Right.
is not so negative as high sulfur fuel is.
Yeah, and it's okay. So the rally's justified, and all data points to the fact that we're still in an environment. And bear in mind, we're nearly 6 months, since this conflict began. Um, the story that I've been leading on with Tom hosting the Business Breakfast Week on Dubai I 103.8, check it out, of course. Don't care about plugging. What it means for inflation. We saw non-farm payrolls come out on Friday, which were everyone's playing them down. They're not a disaster, but they were weak. And yes, I know that the US, the World Cup is over. It was successful now, and there was government contracts that weren't renewed, and that made up the vast majority of the 24,000 drop. But May and June were revised downwards as well. I am starting to get a bit annoyed that people are dismissing the volatile. I know we've got to take food and energy out of the inflation basket, but it comes down to everything. If the cost of diesel is going up as quickly as it is, that has an effect on agriculture, industry,
Well,
heavy commerce,
but
etc.
I would couple that the cost of diesel rallied significantly when the war broke out in February, in March. So those
Hmm.
cracks exploded and they've
Yeah,
remained elevated throughout this whole period. And this has been a question that I've had is that how come inflation has been so tame on a global basis? I mean, you can take the US as one aspect that okay, they have refining capacity and crude production that has not been impacted at all by this war because they've got an internal market which can be self-sufficient and self-supplied like it's done for many years. And the only reason why that they keep exporting barrels is that they're the only supplier out there with excess refining capacity to move to other markets.
yeah,
So the US is a bit of a microcosm when it comes to all this. But when you talk about all your other import markets and the um, actual very little inflationary increases that have happened globally,
yeah.
in Europe, in Asia, it's mind-boggling that we haven't seen a larger hit yet. Because typically, when you have these types of prolonged price spikes, it takes roughly 6 to 8 weeks for those prices to filter in through the supply chains to start impacting the cost of goods as they get delivered from manufacturer to the marketplace. And
Yeah,
so
yeah.
we're well into that 6 week window, yet we haven't yet seen those increases hit yet. Now, is it that consumer demand is down across the board because of the high cost, potential high cost, and the press has dampened people's desire to buy goods and services? Maybe, but still, it should be there.
I agree. I'm just looking at the low on the ice gas oil market. So the low since the 27th of February was $852 a ton, right? 852.50. That was the low that was hit on the 18th of June, which I think was around about the time where the MOU came into force and things started moving, and we'll look at the dashboard in a minute. So that was 100, that was still $114.43 a barrel. Now the high, which we hit, I think it was about, I think I was playing golf. It was, yeah,
It was around April,
yeah,
mid-April,
it
early
was.
April.
So the highest 1587 spot 50 divided by 7.45 was $213 a barrel. So there's $100 a barrel swing between the low and the high. But where we are now, 1310 is still really $176 a barrel. Now I know
Well,
oil price is going to go off the chart, but that's still a very high environment. When you compare on the when was that? The 2nd of April. Where was Brent trading? Go on, mate. You talk. I'm going to find out.
I mean, these are all very valid data points. You know, the big point of the factor is throughout the calendar year of 2025, gas oil prices on the ICE exchange were running right around, give or take $50 a ton, $700 a ton.
When?
Throughout 2025. In Q4 of
Right.
2025, I shouldn't say from Q4 25 up to February 28th, ICE gas oil futures were averaging right around $700, $680 a ton. And
Yeah.
here we are now in for the last 6 months, averaging well above that. And yet that
Yeah.
$400 price swing in the base industrial and transportation fuel for your truck, for your rail, for your secondary power generation, for shipping has not yet caused a inflationary spike or upward bias on inflation to the point where it justifies central banks doing something from an interest rate basis.
Yeah, I agree. Um, when you look at diesel, though, lots of people say, well, Russia, Ukraine, and all of that. The diesel market, middle distillate cracks have been really strong, haven't they, in the last 5 years? Post-COVID,
Well,
middle
they've been
distillate.
strong, but we've been even stronger now for the last 6 months.
Yeah. Yeah, there's all this nonsense last week when we heard about BP doing so well and Shell doing well and Exxon doing well and Chevron doing well and Donald Trump saying, well, they're making too much money. Now, you worked at Chevron, you know the refine, you know the system there. Um, it's a cyclical business being a refiner, isn't it? There are good
Well,
months, there are bad months.
it's always a cyclical business. I mean, nobody was complaining when oil went negative during COVID,
Exactly.
and
I
oh my
didn't.
God, this is going to impact everybody in the world. How bad? Oh my God, these oil. Oh, nobody cares when prices are low and refineries are struggling and oil majors are cutting back production estimates and capital investments. I think the big takeaway from all this, the one piece I always like to point out when government starts trying to say, "Oh, you oil companies are making too much money in this environment." You look at the knock-on impact of people who have investments for their pension funds. Like in the United States, a lot of people have 401ks, which invest in broad funds of different companies at the stock markets, which the likes of Exxon, Valero, P66, Chevron, BP are part of those investment portfolios.
Mm.
So why go after and this is why a lot of this is, there's political speech that goes around high oil prices and big returns from oil companies. But at the end of the day, those high oil are returning into higher returns for people's pension funds, which puts less demand on forward needs of a government sponsored pension because you've got more capital or more money in your account.
Well, exactly. And, I think I was talking to my CEO about it at the weekend. Jim Ratcliffe was in the paper at the weekend saying, buy up shares of refiners, especially in Europe, because they're doing so well. But I
Yeah.
think what it's highlighted is it's not necessarily jump on that refinery bandwagon now. It's more this is highlighted a long-term problem that Europe have, especially when it comes to energy security.
Well, it's also Europe and the United States because when you look at the amount of refineries that have been closed, it's a fair amount of refineries that have been turned off because okay, the either economic sanctions due to environmental concerns have put enough pressure on the company to scale back the refining profile, or the cost of carbon has gone up to the point where it becomes just too expensive to operate because you have to buy the ETS permits here in Europe, or in the United States, you have other things. In California, they regulated how much safety stock each refinery must hold, which made a couple of refineries inoperable because it became uneconomic.
Do you think that governments, I know I've probably asked you this question in the past, but Meg O'Neill, the new CEO, my new favorite person, by the way, because BP announced that they're going to sell their North European assets, their upstream assets,
The
which to
North
me
Sea
is
assets.
their North Sea assets, sorry. Yeah. That to me is because simply bureaucracy and government tax in the UK has got in the way and it doesn't make any sense. Do
Yep.
you think governments realign policy more because of this shock in energy prices, or is it just not? We can never, Europe can never go back to that.
I think they've gone so far. I think the European and the UK governments have gone so far down a certain path when it comes to climate change policies and emissions policies that for them to make a reverse course because the base reality is cost of energy is exceeding the cost of living, which is making a lot of people suffer. They won't make those moves. I mean, if you are truly concerned about the cost of energy in a country, why do you put tariffs on solar panels from China? Why do you put tariffs on EVs from China, which could easily supply your entire country or the entire region with solar and electric material, which reduces your carbon footprint and reduces your reliance on petroleum? If you really were that concerned. So
And
there's a bit where governments create their own mess. And okay, we're getting on a soapbox here, but
no, no,
government.
no, but this is important because this is the kind of shit that the Daily Mail sensationalized, and everyone goes, bloody Burnham, bloody Labour. But this is the reality. Now, what you said there, just to interrupt you, Europe would much rather import 100,000 tons of refined product from Mexico, complain about importing avocados from Mexico, but not have their own refining capacity. I'm pretty sure the carbon emission from importing that cargo from Mexico is the same as running it through a bloody refinery in Rotterdam.
Oh, it would most likely it would be. And at the end of the day, okay, they put all sorts of other incentive, like okay, we're going to have this ETS charge now for that ship. We're going to have the fuel EU charge for that ship, bringing that cargo in that we need because oh yeah, we don't have the refining capacity and we don't allow alternative fuel vehicles to the scope that we should allow because we want to be protective of our own industries. Therefore, we tax everything on a import basis, and therefore we don't allow cheaper based manufacturing of alternative fuel vehicles, which will reduce our reliance on imported oil.
I think they call it bullshit in a normal environment.
It's kind of a circular firing squad.
Yeah. Look, one thing I want to talk about is, regardless of that, because that one we could talk about for ages. The realities,
And if you're in Vote Key in about 3 weeks, we can have that discussion
I'm
live.
sure we will. It will be well fueled as well, literally, with something a lot more leaded. Um, Here is the inconvenient truth that the market is, I would argue actually, the market is acknowledging now, hasn't been acknowledging for a while. That is the delta between what was happening in oil markets, what you were reading in the headlines. We heard US Treasury Secretary Scott Bessent say last Tuesday evening the Strait of Hormuz that will reopen tomorrow. Now, here is where we are.
Well,
Yesterday,
we had that statement last night from Trump. The strait's open.
yeah, the strait is open. Here we are. Here's this open strait. 8 vessels went through yesterday. 8.
And I'm sure if you call it marine traffic right now, it'll be like a ghost town in the Straits of Hormuz.
Let's have a little looky. Can you see this? Hang on, it's loading.
Yeah.
Here we
What
are.
open strait?
Nothing. There's traffic. I mean, we know, we said it last week, this area here is off limits, strictly. Um, if you look at Bab el Mandeb, look at this.
Although we go back, if you go back there real quick, although
Yeah.
it's off limits, but ships are still trying to use the southern route, hugging the Omanian coast to leave, and ships are still doing that, shutting off their AIS.
Yeah. And we heard from ADNOC at the weekend that a boat was hit with a missile on Friday evening.
Yes.
So it's an extremely dangerous environment. And I'm not using that term lightly. You've navigated that strait many times. It would be, I mean, from here to there, you wouldn't. I don't know I don't know how people, I don't know how they're coping with that kind of stress, that anxiety, and it is a reality. Here's a data point for you. For the first time in a while, we have seen zero Saudi Arabian volumes transit Bab el Mandeb. Sorry, it's just loading. Let me come out of this. Saudi crude transits via Bab el Mandeb from my colleague Victoria, based out of Austria. She's great. She writes some really good stuff, as they all do. Um, Weekly transits via Bab el Mandeb of Saudi crude have hit zero. Let me bring up this chart for you so you can see. Now here's the spike. So December, January, there wasn't a great deal coming out.
Well,
Nothing here.
I would say it's probably their normal, typical. They have some of those eastern fields or western fields that they come out through the Bab
Exactly.
el Yambu. So
Exactly. Yeah,
nothing abnormal there.
no, exactly. Summer it spikes a little bit because you've got the direct crude burn and all of that, and when they're not needed, then you can export. But since the conflict began, Bab el-Mandeb has been a key, or Yanbu has been a key export terminal as the outlet on the east-west pipeline, and that's how the vast majority of Saudi crude has been exported. Now, because of the threats of from the Houthis and the real hits against it, arguably why we're in a higher flat price environment right now is because of the heightened attacks from the Houthis on Saudi Arabian targets, especially Saudi Arabian backed vessels. So we've gone down to more or less zero. We begin in the 10th yesterday, zero versus the moving average. That, again, we said it last week. I asked you, how does crude get from Yambu up to the Med if you can't get a VLCC through, and you walked us through all that? We are now in that reality. We are now in the reality where the only way to get crude out Saudi Arabia, can't go south, have to go north, park your VLCCs in the Med, go through the Sumed pipeline. That adds on 5, 6 weeks. That's why we've seen a rally on crude, right?
Well, and we've seen the rally in the flat price circuit. That's part of it, and I think also the market structure in crude has yet to reflect this longer supply chain, because that seems to be fairly subdued. I think $2. But if you look at the total fuel curve, crude curve, the structure has increased down the board. So I think people
Yeah.
are starting to price in the reality that it's going to take longer to get certain crudes to market. I mean, when you think of the supply chain of Iraqi crude, if it can't get out through the straits, it's got to be trucked to export ports like Benares in Syria, Seyhan through the pipeline via Kirkuk. But I think
Yeah.
even Benares are saying that they're averaging almost 2.1 million tons now for the year of exports of crude.
Banias. Yeah, let me have a look.
Benares, excuse my pronunciation.
No, you're fine. You're fine. But I mean, I mean, imagine 3 years ago, us saying that Syria are going to be one of the outlets
Main
for,
export hubs.
yeah. I mean, talk about a crazy market. Yeah, look, so let me just show you this before we wrap up. Let's do exports out of Syria. So 215,000 barrels a day yeah, and look, these are all crude cargoes. SOMO, Syrian government, whatever it may be. Um, I forget the name of the Syrian state oil company. We used to, on a traffic used to deal with them years ago. Sitco, is it maybe? SYTCO? Can't remember. Um, but yeah, look, largely, anywhere, anywhere you can get your oil out that bypasses the Strait of Hormuz, people will snap your hand off.
Well, and that comes back to my favorite saying that oil will find a way.
It's not much of it though.
Well,
This is the issue.
there's still a lot of crude, but yeah, the products are where the pinch point is, and that's going to start rearing its ugly head going here into Q4. So,
Yeah, exactly.
um,
Look, coming into the Singapore window, where's gas oil trading? Okay, front month 1348 a ton for Algi, 89.50 for October Brent, up $1.80. Would you be surprised if we went north of 92 today on Brent?
I don't know. Well, getting above 90 on Brent would not be I think without much of an issue. I would not be surprised to see as we get closer to the end of the year that we could see back to triple digits. Because as demand keeps maintaining its kind of current pace, we're drawing stocks, and it's going to keep going up.
Yeah, on that, by the way, just on that, I heard this earlier on. Where is it? Where is it? Team that the stocks in the US are at a an all-time low.
Well, the SPR is at an all-time low.
SPR, yeah, yeah,
Yeah,
yeah.
well, and it's being drawn into as the SPR program comes to an end from the release that was done, 170 million barrels. And it depends on how quickly the U.S. government decides to buy back some of those barrels that they've sold out or they've swapped out as part of the release. My guess is they probably won't, but again, it's a bit of a misnomer that, oh my God, that's so dramatic. The U.S. is down that far in the SPR because the U.S. is exporting 3.6 to 4 million barrels a day of crude oil, and they're producing 13.6, 13.7 million barrels a day of crude oil. So the U.S. has a lot of SPR that's still in the ground, just not in the tank.
Yeah. So what do we do? Do we buy OpDec futures here?
I don't know about buying futures of crude, but I'd definitely be looking at buying those
Fred.
gas oil cracks down the curve.
Yeah, I think so. I think even a crack at $75 a barrel, I still think there's room on the upside.
Yeah.
All right. Well, we're back at you next week, and then we're going to talk about our pick next week, and then have a bit of a break and go from there.
Yep. Well, everybody, hey, click like, comment, and subscribe. Love to hear feedback from anybody in the marketplace. Um, did we catch it? Did we not catch it? Did we miss it? Did we hit it? So please come back and we look forward to y'all next week.
Yeah. All right, guys. Ciao.